Are you a non-resident who's interested in investing in U.S. real estate? Have you tried to get a loan but got denied, or want to know if you can get a loan so you can buy apartments in Miami or you can buy a house in Alaska? If you want to know how non-residents can get loans, the process, the requirements, you're in luck, because today I'm talking with an old friend and an expert in that. Sheetal, thank you for being here today. Can you tell us a little bit about yourself?
Sure. Thank you for inviting me, Jim. I've been a lender for 26 years, so I have a very singular focus. I just breathe, walk, talk mortgages. I love doing it. And I'm really happy to talk about the foreign national, some investments, because it's a very popular type of loan. Many people want to invest in our beautiful country where they can accumulate wealth with real estate, and this is a great opportunity for all.
Yes, just diversifying, getting out of one country into another country. And so I have a couple basic questions, because I also want to know how it works. And I'm happy to, send my clients to you, and I'll put your contact info below. If you're looking to invest in U.S. real estate, of course, watch the video to make sure you're going to qualify, and then you can reach out and we'll figure out how to arrange that. But what are the different ways that non-residents can get loans to invest in U.S. property? Like in general, how does it work?
Okay, let's talk about what is the meaning of non-resident. So here is someone that does not live in the U.S., does not have a social security number, lives in another country, has a tourist visa. You need to have a visa to come to the United States. So that is your basic requirement. And now you can buy it in two ways, Jim. Number one way, you can buy it where you have a lot of assets. If you have a lot of assets, you have a lot of reserves, that's one way of buying it. And the second way of buying it is if you just buy it as an investor. You put 25% down, you buy a property here. It could be a condo, it could be a 1, 2, 3, up to 4 family house. And it's very easy because we're using the rental income of the property. As long as it pays the mortgage, you're approved.
That's how you get approved. Are there different types of loans? Like how the loans work?
Yeah, so for a foreign national, number one, you're not going to live there. So you're an investor. You can do it as a second home. You can do it as an investment. But what we want to see is that the income, if you're an investor, that the rents are covering that mortgage. Okay? Now, since you don't live here, we're not even checking your credit. You don't have a social security number. There's no credit check. There is no income check. So the primary two things are really the collateral, which is the property you're buying, and the 25% down payment.
Okay, so the down payment requirement is 25%. Is that a floor? Does it go higher sometimes?
It could be 25 to 30%. Yes. That's a great question. I'm so glad you asked. And talking about the down payment, one must have an account set up in the U.S.
Can it be a business account, or does it need to be a personal account?
It could be a business. It could be a personal. If it's business, we just need to know that the business belongs to you.
Okay.
Okay. So as long as the funds are here. Now, that's one thing, because in this market, Jim, both you and me know the market's been crazy. Any good, decent property, well-priced, has multiple offers. And many a times the seller wants to see the proof of funds. They want to say, hey, you're putting 30% down, 25% down. May I see your bank statement? So you have to have the money here so you're able to buy, right? If you find something, you're ready and able to start the process, make an offer, get your offer accepted.
Okay. Yeah, that's with, of course, getting bank accounts and getting that stuff set up. That's something that's administratively can be figured out in many different ways. But that's a good note, that it needs to be in the U.S. already. You can't send money from Colombia to the bank and to own a property. You need to have some kind of U.S. account in the way. So when someone's buying a property, can it be owned? It can be owned by an LLC or owned by some kind of company?
Actually, we like that. So whenever I do an investment mortgage, we want the property to be bought in an LLC. And this mortgage is called a debt service coverage ratio loan. In short, it's DSCR, because we're using the rental income, once again, to pay the mortgage. So yes, LLC is preferred.
What countries can do this? Are there any restrictions on which countries can and can't do this?
No, none at all.
I guess sanctioned countries probably potentially. You can't give you loans to North Koreans and stuff.
Yes, you can.
Everyone. There's no if you have money.
No discrimination.
Yes, money talks. Beautiful. I love that. So no excuses out there. So what are some of the what are the rates that are on these loans typically, like the interest rates?
Yes, of course, rates are volatile, but just to give you an idea, somewhere in the nines.
The Fed rates go down. These rates go down too. They're not like always 9% or anything, right?
No, the rates move. If they go down, they go down. If they go up, they go up for sure. Yeah.
You could always like refinance potentially if you get someone who'll
Yeah.
do it or whatever.
Yeah.
Okay.
Yeah.
Really cool. So what are some typical ownership and tax structures? Do you have like the foreign holding corporation owning the LLC? Do you see that at all, or do you just see the LLC?
I just see the LLC. To be honest, Jim, like there is the best way for tax preparation is they should talk to you, someone who understands stuff, right? Someone who lives here, who understands how foreign national works, because you have a big book of business with international clients. So it's always good to get advice from the right professional for the right thing. So I'm not going to wear your hat. I'm not going to become a CPA. If I need help from a CPA, I come to you. So no, you just have.
I'm just trying to get some. Just trying to learn about like what you've seen, if there's anything unique there. But yeah, I say the same thing. You know, this part's really important, especially in the initially. And the one thing interesting about real estate, especially owned by foreign nationals, is that it's technically subject to estate taxes if you pass, and it's subject to income taxes. So you have to file income taxes, and if you die or transfer the property or have something, you have potential estate tax implications. So there's different ways to structure this and set it up the right way. It's always doable. Usually this is the hardest part when I'm talking to you about getting funding for it or getting a mortgage and setting up like that. So what's like the typical process like if someone reaches out and they say, I have this property, they have to obviously have a property lined up, but I have this property I want to buy. What's like the process like?
To be honest, I would always say before you buy a property, speak to a lender. Right?
Speak to the lender first to see what you qualify.
Let's get your facts order because everybody's situation is unique. It's always better for me to pre-approve a client before they start looking, so they're not wasting their time, number one. But we would like to see their bank statements. I would take a basic application. We have a foreign national application. We would take that. And really, it's two things, right? We want their passports, we want their visas, we want their IDs, and the bank statements. That's what the process looks like. Now coming to the property, now we need a collateral. And I would discuss that with them. We need a collateral that is self-sufficient. What's the meaning of that? That when they rent it, the rent that they get pays the mortgage, right? So that's really, if it's a 4-unit they're buying, okay, what are the rents? Give me the rents of each of the apartments, and then this is the mortgage. Do the rents cover this mortgage?
And then you have to see like some properties might not be rented at the time. It's like estimated market mortgage, like
that's fine. It could be a vacant property. It's empty right now, but then we're going to rely on a good appraiser to give us a market rent. We'll use that.
And then you basically get the account. You just debit out the monthly mortgage from the account, right?
Yes.
Okay. Do you have any other like important tips or tricks that people should know about?
What I would say is that lending, I'm just talking generally, Jim, lending has changed so much. We have so many options for different scenarios. So it's very interesting how we can craft a loan based on someone's situation. Besides a foreign national is someone who just does not live here, does not have a social, but then me and my staff, my team, we are very good with immigrants as a whole. So I just wanted to end with that, saying that whether you have a different type of visa, you have a work permit, you have just come to this country, you have an ITIN, which is just a tax ID. We have so many loan programs for each one that it's great opportunity. And sometimes the reason I say this is a lot of them don't know that. So it's good that people know of the opportunities that they have.
And generally, if they're in the U.S. and they have a job or something, they get a better rate. That's the whole point, right?
Oh, my God. If they have a job, they are legally working in this country, we have grants.
Okay, so no matter what the situation, obviously Shita wants you to have the best rate because that's a happy client. It's still a loan. It's still out there. So you got to see what you qualify for. This is interesting. This is turning into like what I tell people who are looking for the immigration thing. I'm like, look, there's a lot of ways to get it done. In the U.S., it's a country that just gets it done. So there's a lot of ways. There's different visas. There's different loans for you, right? So that's really interesting. I want to sum it up for you so to make sure I understand it right. So in summary, there's no restriction on countries that can get loans to buy real estate in the U.S. from. So there's no restriction on countries. You do need to see that they have money somewhere. They will need to have a U.S. bank account to fund the initial transaction. There will need to be some kind of collateralization, which generally we try and get from the rental income. Generally 25 to 30% deposit on the purchase price. So if you're buying $1 million home, you're talking about $250,000 deposit. And the last one was, 7 to 10% interest rates.
And valid visa, a tourist visa.
Yes, and you need a valid visa. You need a U.S. visa. So a tourist visa is fine. So you do need a valid visa too.
Yes.
Well, that's great. If you're interested in investing in real estate, you should reach out below and get pre-approved to see what kind of loan you could potentially get. And that's the first step. Once you get pre-approved for a loan, you can make offers and you can buy places. So, that is a good first step. I'm going to we'll figure out the right contact information to put in the description below. But if you need help with the first part, opening bank accounts, getting things approved, getting companies approved, tax structures for investments that you have or you're thinking about making, you can definitely reach out to us, jamesbakercpa.com/schedule. Also in the description. And Sheetal, thank you so much for being here and for sharing this expertise. Last thing, if anyone watching this has questions, comment below. And if there's enough questions, maybe we'll do another one, because this one was really quick. I don't want to make a video needlessly long. I think this is enough because we answered all the questions. Thank you so much for being here, Sheetal.
With pleasure. Thank you, Jim.
Thanks, everybody. Like and subscribe.